welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. The Nifty climbing the 10,000 mark, markets at historic highs. 2017 has turned out to be a wonderfully rewarding year for equities so far. A hallmark of this bull run is the big participation that we've seen from retail investors, people like you and me who have learned about the power of investing via mutual funds. So, as the market remains at record levels, the question is, how do you pick the right fund to invest in? How do you know that your fund will make you money? Do you simply go by past performance, or is there perhaps a more efficient way to pick the best mutual funds? Well, that is exactly what we are focusing on the show this week, and my guest today is Ashish Shanker, Executive Vice President and Head of Private Wealth Investment Advisory at Motilal Oswal Wealth Management. Ashish, welcome to the show. Thank you so much for joining in. I know you guys have been doing some very interesting analysis and research into knowing, which funds really work for your clients. But before we get to that, I mean, Nifty 10,000, this market has had this record run. Do you feel comfortable, or do you feel now it's getting more difficult to advise clients as far as equity investing goes?
Yeah, so like you rightly said, who would have thought, we would have hit 10,000 this year, the way we started the year. And this time it's, the difference is that it's being led by domestic investors. See, typically what happens is most market tops or, euphorias are also preceded by earnings tops. But this time around, we've not seen an earnings recovery. So that believes me to think that, we are still in the mid-cycle in terms of the rally. So I'm still comfortable because I think the best still lies ahead of us.
So that means that one can obviously go on looking at further equity exposure as well, even at current levels. That brings us to the topic of today's discussion. How do you evaluate mutual funds as a route? And I know you've been doing some analysis, which seems to be putting the focus not so much on how well the fund has done in the past, but who the person who is actually managing that fund.
Right. So, before we dig into it, let me give you a little bit of a genesis of this research. I've been in the industry now for about 21, 22 years, and I've worked for a couple of asset management companies. And I have always thought that there should be a better way of investing your money or picking funds than just looking at the past returns. So some of the research that we did gave us some, amazing findings. So one of the findings was that only 30% of the funds which are quartile 1 today remain quartile 1 in the next 3 to 5 years. So which means that if you're looking at past returns and then investing your money, chances are that you could be disappointed into the future.
Okay, so then tell us, what is your approach to fund selection now? And I know you're looking at betting on good managers. What's the definition of a good manager?
Right. So this study then led us to understand as to what is a better way of picking funds. So what we did was, we looked at the 18-year history of mutual funds. So when we started in 99, there were hardly 21 equity funds. And by the time we finished our study, there were more than 350 funds. What we did was we stacked up every single mutual fund's performance on a year-on-year basis, and we ranked them among quartile 1 to quartile 4. And we figured that there are few fund managers or funds which continue to remain between quartile 1 and quartile 3. So the funds which consistently remained in quartile 2, quartile 3 or quartile 1 eventually became quartile 1 over a longer period of time. In the near term, that is 3 to 5 years, the quartiles can change quite dramatically. But then when you look at the 18-year performance, you get some sort of a pattern, and you figure that there are some fund managers who consistently tend to remain in quartile 2, quartile 1, and that led us to then meeting these fund managers and trying to understand how you should be investing in funds.
So what is it that these fund managers are doing differently, or what are the parameters which are perhaps setting them apart? And then are they really your star fund managers as per this survey?
We figured that the people who eventually deliver consistent performance in the long run are people who have a clear style or clear philosophy of managing money, which means that they're not trying to chase the market. So they have a particular style of investing, and there are times when their style doesn't work. So let me give you an example. Even some of the best performing funds, a fund which has been in existence for 20 years, it has underperformed the Nifty 30% of the time. Now, typically when you underperform, if you get disturbed and you try to change your style, what happens is that, you continue to underperform because you're then chasing momentum or you're chasing performance. But the fund managers who eventually deliver good performance are the people who stick to a particular style.
Interesting. So what does the study say? What are the most important parameters to come to this conclusion of, let's say, who are the best 5 or the top 10 managers that the study threw up?
Right. So there are 4 parameters that we figured are very, very important, and this is what led us to the 4C framework. One is the clarity of style or philosophy. Does the fund manager have a well-defined style of investing or managing money, and does he stick to that style over different periods of the market, right? Second is, what are the capabilities of the fund house? What is the research capability, or what is the advantage that the fund house has from an analysis or a data interpretation perspective? Third is, consistency of performance. Is the fund manager looking at consistency of performance, or is he trying to chase performance? And lastly, but not the least, it always helps to have a fund manager who's gone through different cycles of the market.
Sure.
So class or experience of the manager also matters eventually.
Okay, very interesting. So who are the winners?
So there were several winners, but we finally, whittled it down to 24 names. And these are managers who manage funds as well as, PMS portfolios. But, for the benefit of your audience, we'll talk about mutual fund managers.
Okay.
So one of the most consistent fund houses has been Templeton. So, Anand Radhakrishnan, Janaki Raman, Roshi Jain, these 3 have shown up consistently in our study. The other fund house which has also shown up very consistently is ICICI. Whether it is Naren or whether it is Mrinal Singh, I mean, their funds have done consistently well. The other fund house is Kotak, so Harsha and Mahesh in Birla. And recently, the Motilal Oswal funds have also been doing quite well.
Okay, really interesting. So, well, Ashish, what we actually did was independently, we also caught up with some of these star managers to try and really understand what goes behind their style of investing. So let's do one thing. Let's play out some of these, clips that we've picked up. The first one being Mahesh Patil, who is the co-CIO at Birla Sun Life Asset Management Company.
Hello friends, my name is Mahesh Patil. I am the co-CIO at Birla Sun Life Mutual Fund, overlooking the equity investment portfolio, which is over 65,000 crores. I manage a few funds, namely the Birla Sun Life Frontline Equity Fund, which is now the largest fund in the large cap category, Birla Sun Life Top 100, and Birla Sun Life 95 Fund, which is a balanced fund. You can sum up my investment philosophy as growth at a reasonable price. That's what I believe in. And also, while investing into, I believe in having a blend of a top-down and a bottom-up approach. Taking risk without actually studying the proper environment, and taking risk without knowing what you're jumping into can be really fatal. Being humble and also accepting one's mistakes and taking course correction whenever the things go wrong, or whenever something goes against one's underlying assumption, I think is an important part of fund management. So one of the investments which we made around 3.5 years back, this was a stock called Bajaj Finance. I think wherever we see a company which can have a very scalable opportunity, has got very good management and a key competitive advantage in a market which is growing, I think then you have a winner at your hand.
Okay, so interesting thoughts there and interesting style. What made him one of the star managers on your list, Ashish?
There are some fund houses who have an overarching philosophy, and all the managers manage their funds based on that philosophy. Whereas in Birla Sun Life, what we found was they give the flexibility to each of their managers to have their own independent style. But there is an overarching theme in terms of buying quality companies at reasonable price. So I think the fact that Mahesh has stuck to his style over the last few years has shown up in performance, and that's one of the reasons why we like them as a fund house.
Though he does say that it's important to also realize when your call is not going right, and it's also important to have that element of flexibility in your approach.
Absolutely, you need to have flexibility. But at the same time, what happens is that sometimes your style doesn't work. You also need to have conviction to stick to it, even when markets are not rewarding their style.
Yeah.
So I have seen this common trait among most successful fund managers, that they don't get perturbed when sometimes market is not rewarding their style, and they do tend to underperform for brief periods of time.
Okay, well, we have to take a break on that note, but don't go anywhere, because we are analyzing several other top fund managers that have been picked by Motilal Oswal Private Wealth. We'll be back in just a moment. Welcome back here with Money, Money, Money. Equity markets at historic levels. And this week we're talking about how to pick the right mutual fund by backing the right fund manager. Do you know your manager? Do you know his style? Well, we have Ashish Shanker of Motilal Oswal here this week, and they are helping us with their research to do exactly that. So, Ashish, let's move on to some of the other fund managers. I believe S. Naren of ICICI Pru and Harsha Upadhyay are two people that you like as well. You like their styles. So,
Absolutely.
we did catch up with Naren. Let's actually hear out first what he has to say on his own investment style.
I'm S. Naren. I'm ED and CIO of ICICI Prudential Mutual Fund. I manage ICICI Prudential Dynamic Plan, ICICI Prudential Top 100 Fund, ICICI Prudential Balance Fund, ICICI Prudential Infrastructure Fund, and ICICI Prudential Indo-Asia Fund. I see myself as a value picker who looks to buy cheap stocks with a long-term view. I believe in looking risk from a counter-cyclical mindset, and based on Warren Buffett's favorite dictum that you should worry much more when people around you are not showing any attention to risk, and when people around you are too cognizant of risk, you should take risk. I have created strategies within my fund management framework to make use of volatility. The entire model of dynamic asset allocation fund is based on the fact that volatility is your friend, and we believe that buying low and selling high is the easiest way of beating volatility. In 2007, pharmaceuticals was one of the most interesting sectors. It was extremely cheap and people found it as a sector not worth looking at. I believe that my experience of investing in 2007 in pharmaceuticals was a very interesting sector pick for me in my fund management career.
Okay, well, he's pretty much known as the contra man of the last tweet, isn't he? Naren's style always has been to go after what nobody else is running after, at least at the moment. Is that something you like about him?
Absolutely. I mean, Naren's style is very interesting and is different to the other managers that we'll see on the show today. He follows a contra style, like he mentioned, and we've seen him follow the style consistently. And it's very difficult to do because you need to have a clear temperament and you need to have a very disciplined approach. Because when you're investing according to the contra style, necessarily you'll underperform sometimes in the near term because you're buying stocks which are out of favor. And here's where I'd like to add, when you're building a portfolio of mutual funds, sometimes we just, put money across 4 or 5 funds and we think that we have diversified. But our study, what it showed up was that, you don't need to only diversify across different managers or different funds. You also need to diversify across different styles, which means that if you have 4 funds or 4 managers in your portfolio, you should have managers who have different approaches to stock picking. And like I mentioned, in ICICI, it's an overarching philosophy. So all the fund managers in ICICI follow a mean reversion style or a contra style of investing.
All right, quite interesting. Well, let's carry on. Remember, this is that edition of Money, Money, Money when we are tracking star fund managers and some of the best names that have been picked by Motilal Oswal in the study that Ashish and his team have done. The next person on the list, Harsha Upadhyay, CIO at Kotak AMC. Let's take a look at what he has to say about his style.
Hi, I am Harsha Upadhyay. At Kotak Mutual Fund, I manage Kotak Select Focus, Kotak Opportunities, and Kotak Tax Saver.
Growth at reasonable price is our investment style. We generally invest in stocks which are growing their businesses but which are available at reasonable valuations. We focus on companies that have proven business models and sustainable competitive edge. In the industry segments, we look for large, scalable opportunities. We look for companies which are able to capture these growth opportunities by efficient capital allocation as well as be able to generate steady cash flows. Management quality and corporate governance standards are also important to us. Finally, the stock should be available at reasonable valuations. Essentially, the focus is to look for compounding characteristics in a stock. We try to mitigate some of the anticipated risks at the portfolio construction level itself. For example, if you're talking about liquidity risk or concentration risk. We try to take care of that at the construction stage itself by diversifying our portfolio holdings. Anyways, it is always prudent to have plan B ready, as you could encounter unknown risks all of a sudden. Managing a fund is like managing a business. You need to be flexible enough to adjust to ever-changing environment. You build a particular possible future scenario and then start investing accordingly. If that scenario is unlikely to pan out the way you anticipated, obviously you need to course correct. Ego can be the biggest enemy for portfolio managers. One has to accept mistakes and move on. Bajaj Finance. The stock has been a 14-bagger since we invested. This was bought at a time when it was transforming itself from a monoline captive auto finance company into a well-diversified NBFC.
Clearly, Bajaj Finance is a stock that's hit a home run with several of the managers, including the ones that we've just heard from.
Right.
But Harsha, is he sort of what, the Virat Kohli style, go for growth?
Yes, again, Harsha is an interesting manager who's emerged over the last decade, and his fund has done extremely well. Like he said, he follows the growth style of investing. But there are a couple of nuances that I also want to mention about Harsha. Apart from looking for companies which can grow, they also have a bit of a top-down approach. They look for sectors which sectors or themes which can provide structural growth opportunities, and they tend to avoid sectors which where the growth is slowing down. So, for example, they went underweight on IT and pharma much before the rest of the market. So that has helped them, emerge as a winner in this rally. Second, I think they were one of the few AMCs who actually took a decent position in Reliance Industries. They thought that, it's time that Reliance as a stock mean reverts. So we've seen in the journey of the last 7-8 years that there are quite a few calls which have worked for them.
Okay, another quick break on that very interesting note. But we continue analyzing more star managers, and of course the critical question, what sort of a manager do you need to back in the current market environment? Welcome back. You're watching Money, 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 and this week it's all about knowing how to pick the right fund manager who can help you make money in those mutual funds. We've been profiling a lot of the managers who've been picked by some thorough research done at Motilal Oswal as star fund managers. So the next one that we should definitely talk about, Anand Radhakrishnan, a CIO at Franklin Templeton. He's a veteran in this market. We actually caught up with Anand to try and understand his style, his whole approach towards investment and picking stocks. Let's take a look.
Hi, I'm Anand Radhakrishnan, Chief Investment Officer at Franklin Templeton India. I help to manage Franklin India Blue Chip, Franklin India Prima Plus, and Franklin Technology Fund. In our team, we strongly believe that value is generated over compounding growth of businesses that grow consistently over long periods of time, generate free cash flows. We definitely are not growth at any price kind of investors. The most important way is to buy businesses at a reasonable valuation. And that is very, the entry point of any stock is very important. The second way to mitigate risk is to not to bet the house on a particular idea. By idea, I would mean that it is not a single stock idea, but by a theme or a concept. One is better off by ignoring the market volatility, but instead focus on the portfolio picks, the businesses, and keep doing it through the market cycles. We as a house have been extremely positive on private sector banks, and we have played it through multiple stocks historically through HDFC Bank, Kotak Bank, IndusInd Bank, Yes Bank. So the primary reason for playing this is that we think private sector banks are run a little more efficiently, and they are well positioned to chip the market share away from the broader banking system.
Okay, all right. So that's his approach. And what is it that you like the most about Anand's style?
So if I were to use a sporting analogy again, I would think that Templeton is the Dravid of the mutual fund industry.
Yeah. Steady as she goes.
Absolutely. I think they are probably one of the most disciplined fund houses that we have studied. and they've done consistently well over the last couple of decades. I mean, they've got one of the oldest diversified funds in the industry. There are some other, very good practices that we discovered that they have. They have a very nice process for succession. So typically any fund that is being managed, you will find two fund managers who are managing it together. So what happens is, as one fund manager retires, the other one takes over that fund very, very smoothly. That gives me a lot of confidence allocating our clients' money into their fund, because the longevity aspect is covered. Because when we make mutual fund portfolios for clients, we like to allocate money to managers where you can just buy and hold these funds for fairly long periods of time and achieve whatever financial goals you want. So I think Franklin is that kind of a fund house, and we believe it should be a core allocation in most investor portfoliors.
Finally, of course, we have spoken about some of the most well-known names on the street. I mean, people who've been around for more than 20 years each. Did the research also throw up any new or slightly lesser-known names, perhaps interesting styles or interesting individuals where you might want to put at least a little bit of your corpus, if not too much? Anything else that can generate that slight higher return in your portfolio?
Yes, so some of the managers whom we did not cover today but have done extremely well. One is definitely Chirag Setalwad from HDFC. He's been managing the Mid-Cap Opportunities Fund, and again that's been one of the most consistent funds in terms of returns as well as in terms of style and approach. So I would think that that's another fund that I would definitely back. Some of the other interesting names that showed up in our study, one was Nilesh Surana of Mirai. Again, a couple of his funds that he manages have been consistently in the top quartile. And the other name I would like to mention is Vinit Sambre, the DSP Microcap Fund, which again is a very bottoms-up kind of a portfolio. But there again, the universe of stocks is small and mid-cap, but they have a very strong focus on quality. And within the same space, I would definitely like to mention the Franklin Smaller Companies Fund as well, which is managed by Janaki Raman. Again, that's a very high quality portfolio, but investing in the small and mid-cap universe.
Well, there you go. Now you have a whole basket of funds to choose from. You also know a little bit about the investment psyche, the philosophy that's going behind the fund selection process, and of course a stock picking process. Ashish, thank you so much for joining in and shedding light on these very interesting aspects of making our money work the best that it can. Appreciate you being with us on the show this week. That's it on this edition of Money, Money, Money. We'll see you again next week.